Assalamualaikum and hello everyone. My name is Nasa binti Mudi. My metric number is BB2211036. In this video, I want to present about my main group case study, which is Diamond Chemicals PLC and the Merseyside project. This is our group members in this group. This is the table of content in this slide. First of all, I want to present about the introduction. The diamond chemicals were pressurizing by their investor to improve the performance of the company. Therefore, Frank Greystock analyzed a project of capital investment at Merseyside Works in England. The initial investment for this project is £9 million, and Frank Greystock had performed the DCF analysis for this project. The purpose of this project was to create opportunities related to increased production efficiencies. However, the different issues have been raised by the members of the different departments, such as discount rate, marketing, cannibalization, and capital expenditures. Therefore, it needs to be evaluated and decided that the company should go ahead the project or not after analyze all the assumptions. So we go to the question 1, which is how does Diamond Chemicals evaluate its capital expenditure proposal? Why such a complicated schema? The answer is Diamond Chemicals evaluate its capital expenditures by 4 different categories such as a new product market or market extension, engineering efficiency, and safety for environment. The evaluating capital expenditures proposal becomes such a complicated schema because the Merseyside project categorizes it as an engineering efficiency, which is need to meet a few requirements. The first one is impact on earnings per shares (EPS), whether it will be positive or negative. The additional EPS in these capital expenditures will be approximately 0.1005, which is the impact is positive.
Hello, my name is Jihan Faradila binti Herwan. My metric number is BB2211066. For today, I will answer the question 2, which is what is the transport division suggestion? Does it have any merit? First of all, transport division suggestion is to increase the allocation of tankers on the project Merseyside because of the processing power of the project Merseyside increases. Which is Diamond Chemical have received propylene gas from 4 petroleum refineries in England to the project Merseyside. Therefore, the transport division have to take responsibility for managing the tankers to oversaw the movement all raw, intermediate, and finished material throughout the company. But this suggestion was rejected by the Greystock due to the increased company expenses. Based on the proposal, Transport Division want to increase the allocation for plan to purchase the new rolling stock for use in other areas, and it costs $2 million. It also stated that allocation requested for the transport division proposal has exceeded the existing company, so that Greystock give the suggestion to the transport division to depreciate the asset, which is rolling stock, by 10 years.
Assalamualaikum and hi, my name is Siti Nur Arifah binti Amir. My matrix number is BB2211048. We'll answer the questions number 3, which is what is the director of sales suggestion and does it have any limit? The director of sales suggestion is they probably have to shift capacity away from Rotterdam to Merseyside in order to move the added value. due to the downturn of the industry and looks like an oversupply is in the works. Other than that, the market for polypropylene is extremely competitive. However, Greystock has not taken into consideration of potential costs of the lost revenue of the business at Rotterdam in his preliminary analysis of the Merseyside project. Whether doing so is beneficial for estimating is debatable. Although the cannibalization charge is difficult to determine, ignoring the cost entirely is inappropriate when assessing the project's capital investment. Mori should request a more accurate estimate of the business loss resulting from the cannibalization issue from the Director of Sales and Marketing Department and include the relevant loss of the analysis. In fact, the Director of Sales is correct by saying that Greystock shouldn't be overconfident that they can sell the additional output and release the full efficiency of the project given how competitive the market is. Mori should request data from the Vice President of Marketing to demonstrate the likelihood that a certain proportion of the lost sales volume will be recovered once the market recovers.
My name is Neng Fatima binti Jukil and my metric number is BB22110657, and I will explain about question number 4, which is why did the assistant plant manager offer his suggested change? Does it have any merit? The assistant plant manager suggested a project evaluation regarding improvement to a polypropylene production plant. The EPC project gonna give Diamond the lowest EPC cost base in the world and would improve cash flow by 25,000 ad infinitum. However, the project was rejected by the executive committee because the net present value of this project was negative 750,000 and because of the economic grounds. The assistant plant manager suggested the project because he believed that the project is a very good investment that can help the company exploit the market when the recession ends. He also suggested to include the EPC project as part of the polypropylene line renovation because the positive NPV of the poly renovation can easily sustain the negative NPV of the EPC project.
Good morning, my name is Nur Amir Shazwani binti Abu Nerang. My metric number is BB22110761. Today I'm going to answer question 5, which is what did the analyst from the Treasury staff mean by his comment about inflation, and do I agree with it? Okay, the analysis from the Treasury staff, Andrew Gowen, highlighted his concern about the rate of return used by the company is not adjusted for inflation. He stated that Greystock should conduct the analysis by using real rate of return instead of nominal rate of return, since the DCF analysis includes a 3% inflation component. The 10% discount rate that used by Greystock is a nominal rate and therefore lacking consideration for inflation. So by calculating using the formula, the real rate of return is 7%. Hence, the nominal discount rate should be adjusted for inflation, which is 3%, and a real rate of return 7% should be used to discount the incremental cash flows of the project.
Hi, my name is Surendra binti Muhammad Nawir. My metric number is BB22110318. For question number 6, which is how should Greystock modify his DCF analysis? Greystock need to modify his DCF analysis. First, they need to make improvement for the transport division by take the cost of the tank car as a capital expenditure, and they need to do depreciate per year. They also need to listen to the treasury staff to take the inflation rate and change it from 0% to 3%, because if they want to calculate the NPV, they should include the normal rate, which is including the inflation rate.
Hello, my name is Aisha Izzati binti Roslan with number matrix of BB22110567. I will answer the question number 7 for my group, and the answer is the Merseyside project that awards to Diamond Chemical was the polypropylene pellets project. Why I said so? Because as we can see, based on the provide data, this project has 9 million pound sterling the total cost and has 25.9% of internal rate of return, that also known as IRR. Because of that, we believe that this project should be promoting more, since it can bring a lot of profit in the very long time. Another benefits of this project was it has a positive of NPV that would save another project that Diamond Capital would make in the future. That's all. Thank you.